Good morning, ladies and gentlemen, and welcome to the Coffee with Craig show. We'll be talking about commercial real estate in Central and Eastern Europe. Good morning, ladies and gentlemen, and welcome to the Coffee with Craig show. We're just following up on our event last week. We had a couple of super panels on the CEE Retail Awards and Forum. Our second panel was really talking to some of the retailers, the developers, also what's going on in e-commerce, bricks and mortar, warehousing, how this has all affected retail with e-commerce and some of the players there, and with the investors. So we had Sweet Gallery, which is a big retailer that's just expanding like crazy onto the market. Invesco, big investor in retail, in logistics these days, also in PRS. Multi-Poland, which is a developer and also now operating some shopping centers. CMS, head of retail and real estate and construction. What's happening on the really with the investors on the legal front. Also Panattoni, some great information from Panattoni, and Equilis, of course, another big shopping center developer and manager of the shopping center. So and investor. So quite interesting group. A lot of good questions, a lot of great answers. So we'll take a 20-second break to tell you a little bit about our next event, which is SCE Awards in Romania, covering Southeastern Europe, and then we'll go straight to the panel. A lot of interesting things. Welcome to the 17th Annual Europa Property Southeastern European Real Estate Awards and SCE Forum, held March 31st at the SAS Radisson Blu in Bucharest, Romania. With the most active international, regional, and local investors, developers, and property owners attending, this event continues to be the single most important in the region. The deadline for nominations is February 24th, and with seating limited and the Radisson Ballroom quickly filling up, now is the time to reserve your sponsorship package or corporate table. All right, so please welcome to our panel, and we'll get started. Come on in and find a place to sit, and we'll get moving on our first one, or our first pronunciation. So one of the first things I'd like to do is we'll start the panel with just a quick introduction of all the panelists. And Frederic, we'll start with you. And please tell us a little bit about yourself, your company. I see we have a few more microphones down there. So,
Okay, so my name is Frederic Rouleau. I am the country asset manager for Multi-Poland. Multi Corporation is a pan-European company working and managing a shopping center, especially, but also offices and logistics. We are present in 14 countries in Europe and Turkey, with 14 shopping centers in Turkey, also Ukraine, Poland, Slovakia, Germany, Italy, Spain, Portugal. We are proposing most of the services for the management, asset management, capital market also. So this is our company, we say. I've been working for Multi for 2 years now. Before I was in a casino group, so a retailer, also in Poland, 20 years in Poland.
Okay, thank you. And Matthew.
Good morning, Mathieu Giguere from Panattoni Europe. We are a pure industrial developer. We are American-based, but in Europe now in 13 countries. We develop between 2 to 3 million square meters every year of logistic, last mile, as well as fulfillment space. A lot of our clients are retailers, the same as the shopping center owners. So happy to join the discussion.
Okay, Anya, good to see you.
Good morning. I represent Invesco Real Estate. We are independent investment manager investing globally. We have roughly 70 billion under management globally. In Europe, it would be about 15. We are present in pretty much every European country at the moment, and we have roughly 180 properties invested in different sectors. Roughly 20% of our portfolio is invested into different form of retail, starting from luxury in the center of Paris and ending up with the very different retail parks or like standalone units. Happy to join the discussion.
Great, thank you.
Hello, Małgorzata Madej-Balcerowska. I represent CMS Law Office, and we also construct retail parks, shopping centers, warehouse buildings. So we help all players on the market in various scopes. Thank you.
Hello, I'm Karolina Szklarska. I represent Switch Gallery company, which is a franchise company, the biggest chain in Poland and in Europe. And I rent a space from most of you, actually.
Okay, great. And Monika?
Hello, I'm Monika Woźniak Zawioła. I'm head of retail at Equilis, which is a Belgium origin developer. Equilis is also part of a larger investment group, including stock listed REIT. We grew from retail, therefore majority of our investments is located in retail. We intend to sell the development projects at the opening. However, we have been holding some portfolios for over 10 years even, and having this investment component in the group, we also have an owner's vision. We believe in retail development still in Poland, and we hold both types of retail that we have discussed in here, so shopping centers and retail parks. And we have, let's say, investment plans in Poland, mainly in retail parks portfolio.
Okay, great. And Anya, if you don't mind, we'll start with you with the question of how is your, let's say, investment strategy changed over the last 2 years, and what do you see going forward? What is your investors looking at, and what do they want you to focus on?
I think we are very similar to the majority of the global investment players. So this is not a secret that I will say that since COVID development, there was a basically pretty much stop in investing into retail, and very little transactions have taken place since that time. Logistic is clearly the winner. We've been active in the region for years now with the logistics, with our partners, who is actually sitting here next to me, one of them, and we've been very successful with those strategies. Another area which is clear is the whole residential sector. I know it is only starting now in Poland. Again, this is something that the institutional investors want to have the allocation, and this allocation into residential PRS sector is increasing across the board. And these would be the trends. I think one observation with respect to retail is that recently we see a comeback to so-called retail parks generally. And that's the trend we observed, that there are players looking for it. And, you know, if I look at our portfolio, the retail parks that we have been pretty much resilient towards the COVID situation. They've been pretty much operating across the board and been open for the majority of the time, and very little requests or very little discounts or very little bankruptcies, which is probably contrary to what we are seeing in the large shopping centers. Particularly, I think UK has been affected very detrimentally in terms of the performance of the shopping centers. But there is some recovery, I see. I'm not sure what would be the investors' appetite going forward for the retail, but we can see clearly a recovery.
So the tenants that you have now in some of the bigger projects, they're okay. Maybe they're definitely having some hard times when it's closed down. But do you see their sales coming back to, let's say, sustainable amounts?
I wouldn't say sustainable amounts because I think the whole retail business model has changed. Yes, if you look at the stock exchange or information, publicly available information of the largest retailers, you will clearly see that their online sale, double, triple, or whatever from year to year. So their turnover has shifted from the basically brick and mortars into the online. So overall, retailers are saying that probably they are happier. I'm not sure that they would say they are happy, but they are happier than they were because they clearly see the sales increasing. Whether the performance of the individual stores and profitability of those stores is maintained and whether this is at the same level as pre-COVID, I would have doubts in most cases. That's why we see push towards the turnover rents. Right. Otherwise, they would be happy to pay the fixed rent, and that's probably the reason. One probably class of asset which is interesting is the outlet sectors, which is again very resilient. An outlet and the fashion in the outlet sector. We have also a couple of outlets in the portfolio. They've been doing pretty well.
Mm-hmm. Okay. And Frederic, when you're talking to your retailers in Poland, what responses are you getting, or how do you see things? Let's say which ones are doing better, which ones are having a hard time. I mean, not brand names, but just like sectors. Let's say.
I think it's not surprising. I think the gastronomy is suffering still.
They're doing well, or they're having a hard time?
They still have a hard time.
Okay.
They still have a hard time, not because the footfall has not come back and the people are not going out like it was before. So we have some shopping center where it's a lifestyle shopping center. We can say that we have people who are meeting before pandemic. This situation has not come back to the normality. There are still people are still a little bit scared about meeting, and there is also restrictions. We have to wear masks. It's not so we can say so easy and comfortable. So I would say maybe it's the most suffering sector. With entertainment, it depends. It depends. But after, yes, we saw a recovery of turnover, and where we are comparing to 2019 because it's pre-COVID. Most of the shopping center that we are managing are over this the pre-COVID level, but we lost the inflation.
Right. Okay. Yeah, the inflation is coming up. Karolina, a question to you, because I don't really see a lot of your clients ordering candy online. I imagine a lot of when I walk by your store on Nowy Świat, it's just little kids dragging their parents into buying stuff, and of course me cutting in front of them and buying more. But how is? I mean, you're talking to a lot of course you're getting the numbers every day from your franchisees. What are you seeing?
Well, I see big development. So we are developing very much. To give you some idea, so 2020, it was when the pandemic started, it was hard for everybody. We were in panic a bit. And one day we terminate 350 agreements with shopping centers, shopping malls, retail parks, and so on. But we came back very quick. We came back to the game. And in 2020, we opened 150 new points, mostly Lodolandia and Bafra Kebab, because there are two so Lodolandia is our best selling model concept, and Bafra Kebab is start to be the best right now. And in 2021, we sold 230 new points. So at the end of this year, we reach over 750 locations, mostly in Poland, but we are also present in Slovak, in Germany, and in Romania. Our plans for next year is 400 new locations. And in 2023, we plan to reach 500 new locations, new openings. So we think we see that we are COVID resistant actually, and our trend is we follow the trend, so we go to the retail parks. We stay in the shopping center, shopping malls, and so on, of course. But we have for them another concept. Sigelato, it's more premium ice cream, and Kołacz na Okrągło, which is it's a kind of cakes, fresh made. But Bafra Kebab and Lodolandia will be expanding in the small city, even for up 10,000-15,000 people. So we see that people like it, love it, want to be close to the people, and we see just big develop.
All right. Okay. Great. And Małgorzata, just give us kind of I'd say a view of what your clients are doing. Let's say doing from 2 years ago to what kind of deals are you doing now, or what do you see changes? Because I know, of course, you're doing the law and you're doing deals, but clients are asking for different things, I would imagine, these days.
Yes, we can see that the market has changed, but mainly I think at the moment the main trend is the automation in the logistics centers, and we see more and more agreements with operators of those automation portals, systems, etc. We also see more and more transactions on retail park, as many of you know and say. So retail parks, smaller shopping centers, this is the market at the moment. We can see from retailers' point of view, we still see newcomers. So we know that new brands will come to Poland. So this is still a market for them, for big labels and also for small labels. So I think that not only e-commerce but also brick and mortar will still be in Poland. And I think the next trend that we will see maybe next year will be ESG more and more, because not only the shopping centers but also retailers will focus more and more on ESG. So I think next year we will be speaking mainly about ESG than e-commerce, I think, and logistics. Of course, logistics is as Ania said, and Mathieu, this is still the winner of the market, I think, and we represent clients not only from developers' side, but also from the retailer side, and we see that each big chain would like to have their own, either built to own magazine or built to suit lease agreements. So this is still a market for them.
Right. And I'm kind of afraid to even ask, but since I saw that you're doing construction department as well, I mean, what is going on between contractors and developers? Because I know, when I talk to a contractor or a builder, I'm like, and I just asked them. They said, "Yeah, we submit an offer. Yeah, it's good for 3 days. I mean, pricing. So where before maybe it was good for 6 months. So the real question on this, and maybe Matthew, I'll jump to you after we get the legal answers here. But I imagine, do you have just a pile of litigation on these construction issues, or is it somehow they're working themselves out? Because I know the prices are changing and they're going up, and some of the developers that are looking at doing even retail parks are like, look, we're ready to go, but it's still 20% more expensive than the offer we got not long ago. Yeah. So what's on sort of continuous contracts? I assume you're kind of in the middle of all of this and some issues. And what is the trend, or are they working it out, or what's happening?
You are right, and our developers are telling us this, that the offers from the contractors are valid not 1 month but 3 days, and this is still true. We do some litigations, but from my perspective, of course, Ania and Mathieu, please correct me if you have a different view on this, but I think contractors and developers, they are just working out all issues amicably. Why? Because there is no time for any dispute. There's no time, everything is changing very, very fast. They still have a lot of work together. They are doing many constructions together, and there is simply no time to do any dispute, because if not on this project, we will solve this issue on another project. So this is good market for contractors. So I don't think there is a room for any long litigation. But sometimes it happens. And it ends in the court.
I mean, I see the end users, if they're e-commerce or manufacturers, they just don't care. They're like, get it open. In a lot of cases, I mean, don't care, but like, get it open now because we need to deliver 1 million packages, you know, whatever, March 31st, we need it open. So maybe jumping to you, Matthew, at this point, I know we don't have to ask the question, how is the logistics business going or anything like that, because we pretty much know, and plus we're reading the news every day, so I hear how you guys are doing. But how are you dealing on the, let's say, delivery side, where, you know, you told a client a year ago it's going to be this price, and now obviously with your contractors and subcontractors dealing with them, what are some of the discussions, let's say, if we can ask?
Thanks for that. We can maybe jump on the retail side, which is very interesting from a client base, but about inflation. I mean, this is a discussion about inflation. I think it's affecting every sector, and it's about, you know, it's about the timing and the service approach. I think maybe it's easier for us, as our business model is we're giving a service to our clients. We build space for them. And it's about adapting what they need fast and turn it, versus a real estate promoter who's planned a site 10 years ago and built it and had his model, and now he arrived to the market and the contractors say, oh, it's 50% higher than what you have in your model, and then the whole thing doesn't work.
Doesn't work, yeah.
I think obviously you need to deal with that, you need to adjust, and the margins are a fact, and the flexibility, but it's more about adjusting. Get the partnership, as mentioned, is about partnership with our GC. You know, it's sometimes you lose on one deal and sometimes you win on the others. But when you have many projects and it's rolling, I think it's easier to manage. The most difficult is when you have a long project that catch when the curves go. Now we know the inflation is there. We know where are the price. It's just a question of aligning the partners.
Some of the older deals.
Correct.
Yeah. So you joined Panattoni 2 years ago or 3 years ago? Yeah, 3. So tell us about. I mean, I see your job title. It sounds great. So what do you do? What are you doing at the company, if I can ask?
I mean, Panattoni is obviously known a lot in Poland and Central Europe, but we have become a major European players. You know, we're in 13 markets. So a lot of you know the business here and the team. We are now 600 people across Europe. And we have clients. A lot of them are retailer and have always been, but we have clients that obviously needs the same service across country, and that's a bit what I do in helping. We have very strong team, and we've always been focusing on having local capability and knowledge. But I'm there to make sure if a client needs something in Spain and Germany and in Poland, we can offer the same kind of responsiveness and the same way for our investor, you know, that are not just investing in Poland, but they want to do the same in Portugal or in the UK, and we can. These are also our clients to find, you know, and build asset for them. So that's what I help the guys do with my background to help a lot in the e-commerce, but not only with retailers. With my background, so that's what I do.
I mean, talking to, you know, we've been talking to retailers for about over 10 years, and I know in the past, you know, sort of pre-COVID, they were like, oh, distribution, we don't care. We have 2 locations and we service Europe. And then I just see, you know, because Winston's reading the news every day on the show, so I'm there listening to it, and I see, oh, the same retailer now has 4 regional places, 13 hubs, and 25, you know, kind of last mile points. So I would assume some of these clients have just expanded this, yeah, because of the logistic needs.
Yeah, absolutely. I think we forget that this is all about supply chain. You know, and obviously with our real estate segmentation, shopping center, we focus on the real estate asset class. I've been 20 years in Poland in real estate, so we like our building qualification. Even industrial, there was the warehouse and the cross dock. We were not sure, but at the end, it's about retailer supply chain. You know, how they produce, source, and get the product to the client. So now there is obviously, we're trying to say whether, you know, clients are going from brick and mortar to e-commerce, but at the end, it's the same retailer. I mean, our clients are Carrefour, IKEA, LPP, they're all the same. And they're just trying to do the same they've been always trying to do, is to sell the product and get it to their clients. And yes, you're right that because of a number of things, e-commerce is one, but you know, social platform, COVID, supply chain, and competition from different market retailers have to adapt and to be more efficient to get their product to their clients. And yes, before it was, let's get a distributor, let's give him a warehouse, and then he'll sell some pallet to our hypermarket, and then we'll sell it. And obviously the market has changed, and it's not because of only of e-commerce. And for us, it's just to give them the space they need. But we had to adapt. Like I said, a lot of, you know, industrial developer, they were, you know, panicking as well. I need to put a mezzanine in a building, and I need to have 100, 300 people in a building. You know, warehouse were not done for that. They were done for 10 forklift guys with pallets. We have adjusted the same way shopping centers are adjusting. But you're right, retailers, some will fail, but some are already adjusting. And like I say, a lot of the one we're serving, they have shop, they still have shop, and they will have shop. They just adjusting the way where the guys want to pick their order, and I think that's what is. I think in real estate we just need to try to. I had the same with you know, when I was at Amazon or WeWork. We see the class of asset, right? But funnily, we probably build more office space in the last few years as industrial developer, because a lot of the fulfillment you have, you know, 10,000 square meters of it. It's not about the asset class; it's about what the clients need.
And you mentioned, I mean, supply chain. Now, are you finding that? And I guess it always would seem like it would be a little bit slower process. But are you finding that where a lot of the real factories that were, let's say, set up in China and only operating out of China are really starting to set up in Central Eastern Europe and operate as if not a main source, but as a secondary just-in-case source? Or how do you see that coming to fruition?
Mean, there is some production moving in. You see the Chinese also even.
Yeah, they're also moving in.
They're producing, but of course Americans in Western Europe have moved some of their production in Eastern Europe. But it's also a lot about getting the product closer. Okay, some are assembling it here because of also from a tax point of view. So production still is important to stay close to the materials, right, and the labor. So, but it's the supply chain is more about getting the product closer,
right?
Because of risk of COVID, but also because the clients want it faster, and so it needs to be closer and in more different number of units. So it's why the e-commerce guys are building volumes,
four-story high
to have one
place,
units of everything. And I think that's that change of. Fast fashion is changing as well. You don't send a collection, and then 4 months later you can send the rest. It's every 14 days on TikToks. They want different shirts. So it changed the way the products need to come closer. But the example, the problem with the freight, and on boats were used as warehouse. But because there's such a backlog, some are saying, well, let's open another warehouse instead of having the container moving so long. Before it was okay, but now I need it now. So, and that's the movement of space towards closer, let's say, to...
And I think a lot of those guys that we were talking to on the freight, they said, before it was $2,000 to ship something, now it's $15,000, and it takes 3 weeks longer. So, something like that.
Calculating how much it costs to have a container of goods versus a warehouse to hold it. Now the difference is
it's looking better.
Cheaper to put it in a warehouse earlier. But so all these elements, I think, are in the balance for retailers to just compete with. Often there's the same product, and that's what we realize. At the end, the same e-commerce guy or the shop, it's the same product.
Right.
It comes from the same factory. Is whether somebody's bringing it faster and cheaper.
And so, and also it seems like they're opening a few more factories here. So it's already no shipping, just the materials, I would imagine. Yeah?
Correct.
Yeah. And so Monika, back to shopping centers a little bit. And you know, I just remember 2 years ago getting an email from your company saying, welcome to our grand opening, our shopping center. And then the same week, everything was shut down. So tell us how it is. I mean, everyone's in similar boat, but tell us how it is to, one, put off the grand opening, and then how to build the business from there. Because I know you did a lot of CRS and community activities. Not to take your answer, but I've just seen all the other things you were doing you couldn't open, but just keeping awareness and helping out the community when they needed it, yeah?
Well, quite difficult because we have opened Galeria Helm this is a relatively small city closer to Ukrainian border. So not many investors were brave enough to invest in across those borders, and we did. And that was a project that everyone waited about 10 years to be developed, so everyone was anxious. And then finally, within the voivodeship that had, let's say, the very fast-growing COVID cases and first COVID cases in Poland, we were just unable to do a proper opening. And of course, since that time, so, you know, imagine we planned that about a year before the opening, all the marketing activities. So we have more than 2-3 years contracts not utilized, prepaid for certain marketing activities. And yes, we did, and we were even awarded. I'm happy that we were for our activity, because, you know, quite a difficult time, a time when we had to cooperate with tenants and find ways to bring the footfall back and to solve the issues with tenants. And we were trying to be cooperative, supportive, and with keeping this really personal, direct contact, quite unique thing during COVID. And we have decided to use majority of our budget and even, let's say, increase our marketing budget by 100% to an activities that we believed would work. And I think it pays off. I have seen the competitors, in fact, limiting their budgets and trying to do savings, while we did the opposite. And I think it paid off, of course.
Yeah. Okay. Great. So how is Helm doing now, and how do you think? From where it's at now, what do you think would be, let's say, the difference, or less or more than before COVID, if it would have not had this issue, let's say, if you could imagine?
Well, we do the research, and of course we do our analysis. And the funny thing is that about 15% of the potential customers still have not visited the shopping center. So you know, we didn't really have a case where the times were so difficult that we had a vacancy, like, you know, for many retail projects, shopping centers, new shopping centers, 10% vacancy at the opening was a more or less normal case, which is of course difficult to run then and have a proper first and second year operations. But we had fully let, and still yet, you know, we are trying to reach our customers, and unfortunately let's say restrictions at the borders, we still see only 3%, and it should be double for the customers coming from the border, from Ukraine and Belarus. So this is definitely the impact.
Sure. So it's more just that. So the people you're waiting for are really and across the borders in Ukraine and Belarus, and probably it's just difficult for them to get back and forth.
Yes, exactly.
I would imagine. Yeah. Good. Okay. So Frederic, tell us a little bit about, let's say, the mix, how the tenant mix has changed over the last 2 years, and what are some of the bigger or less significant things that have happened that you've had to change to keep the shopping malls together and operating properly?
The trends that we can observe. We can observe a downsizing of grocery, of food and cars. We saw that in our shopping centers, in Magnolia, for example, we replaced 11,000 square meter Tesco by 7,500 square meter, Carrefour with upgraded offer, and also a lot of discounts. We see that Poland is also a discount country. We see that the discount is expanding quite fast, with Action, with half price, with Steady, Pepco, quite appreciated by Polish people. And also the sport, casual sport, is expanding a lot. And we saw that also these brands like Nike are looking at Europe more globally now.
Right. Because casual wear has kind of replaced business wear in a lot of cases. Yeah. I know the poor guys making the suits; they look pretty tired at the moment.
Yes, but
pretty quiet.
We are looking also. We are looking also for some changes that we saw pre-COVID, and we hope that it will come back, and we think that it will come back, like food and beverage will expand, entertainment also will expand. But we need a more stable situation with the pandemic and with also a legal situation.
Right. Well, I can see this COVID also shrinking my clothes sometimes, so there's another problem with it. So yeah, any questions from the audience, please feel free to jump in anytime. Just raise your hand. We'd love to have you ask any questions. So Anya, how do you see, we're at the start of 2022, how do you see yourself, what is your plans for the end of the year? Let's say, what would you like to invest? What is the end goal, and what are we know the projects, PRS and logistics, but what is sort of your budgets?
Well, it's quite difficult to say, because what we are doing, actually, we're expanding the pool of investors, and again, we're trying to be flexible and adapting to what is required. So the capital raising that we see, we used to be a very core investor by definition. We used to have, core German money, institutional money, pension funds money, investing in the income-producing 25 or 30-year lease products.
More annuities than...
Yes. So these kind of things are gone, and obviously even core investors are now eager to take a bit of risk, or even they are moving on the scale into the value-add or even opportunistic deals. And what we see that we have very many investors who are willing to undertake much more risk around developments, even speculative developments, so without leasing being secured, in very different categories. I wouldn't say that retail is on top of the agenda, but we have some opportunistic players looking with us at retail parks, for example, in UK, and I think this trend will come very quickly to continental Europe. So there are two aspects. So the investors are generally trying to realize the returns by taking higher risks. At the same time, higher risk means that they need to step into either refurbishment or redevelopment or development. If you add the inflation and almost inability to predict what would be the final cost of the complex construction, and I'm not talking about logistics, which is not very time intense. Yes, we're talking about 6 to 9 months of the construction. But if you're talking about, repositioning and building the residential on the plot of land in phases and with the zoning and permitting risk in place, this makes the whole approach very, very difficult to predict. So what we're trying to focus on is really, we focus on basically gateway cities in Europe. That's what we want to stay in. Obviously, this does not apply to the logistics, because we pretty much can build everywhere. But gateway cities, transportation hubs, and that's where we want to focus. And even if the cost of the development will get higher during the construction, and I agree that the prices are fixed for 3 days, and if you don't make decisions, you just pay 20% more. But we believe that those locations will enjoy still the very attractive yields. Obviously, there are other risks to be taken into account: higher interest rate rising, the whole geopolitical situation with Russia and Ukraine now. This impacts really the decision-making process, and I think we're underestimating the impact of that as well, generally for the real estate and capital market. So we have money. Our investors trust us. They give us much more money. I think that the challenge is to find the right products, as always. To find the right products, you need to take a bit of a higher risk than usual, and be more creative and be adaptable and be able to change and adjust during the investment process.
All right. And from U.S. investors, I've heard two things regarding Ukraine. One group is saying, oh, well, if something happens in Ukraine with the Russians, this is going to be a disaster for Europe. And other investors have said, hey, if something happens in Ukraine and the new border is Poland, it's going to make Poland more interesting for Western investors. What is your opinion on that? Or what is your, if I can say, your investors, or you fall into place in that? Really two ends, different spectrum.
If I was to put my own money and I would be a US investor, I think I would be taking this into account, that Poland is actually very close to Ukrainian border, and you don't know what is happening. And there are plenty of other risks. There is COVID, there is interest rate, there is inflation generally, there's labor shortage. So there are a lot of risks that are outside of the control of a typical real estate investor. Yeah. Why would you put an extra geopolitical risk on that? Well,
everyone has those risks, right? I don't know anyone that doesn't have inflation or COVID.
Yes. So that's. I think countries like Spain or Italy or Ireland or the whole Scandinavia will benefit out of that, where if American investor is looking at Europe, they want stability. They don't want to be very aggressive.
Right. Okay. Małgorzata, you're global. So what are the global clients saying to you, or what do you see in the network there of where investors are interested in or developers are interested in? Are you seeing a change in that?
For the last few years, we saw the change. There were more investors from Asia, and I think this is still a market for them. We will not, of course, we cannot predict what will happen next 2 years. But I think the capital from Asia will still be in Poland and will grow. German investors are looking with some thoughts at the moment, I think, but we can see also investors from UK. So it's hard to say how the market will be in when something happens in Ukraine, and whether we will see what you said, that we will have the opportunity to have more investors. But I think Poland will still be a market for the investors, because we are a great potential to be a supplier for many countries, to have those logistics hubs in Poland to supply many countries. Of course, more and more last mile centers are needed. You buy today and you expect to have it today. So there will be more and more also local hubs. And from a different angle, from the retailer's point of view, I think we will still see the trend of new marks coming to new brands coming to Poland, also luxury brands. Of course, Frederic was right that maybe we are this country, right? But we also have a room for luxury brands, and I think last week we had a contact from a luxury brand who wants to open stores in Poland. So I think there is trend not only for discount brands, but also for luxury brands in Poland.
Right, yeah, no, the luxury and premium brands have been doing well, haven't they? I mean, they're new record highs in the stock market even. There was a comment about ESG, and I think at our event, in our Investment Awards event in October, I think we'll be talking a lot about ESG. But just a few comments on this, and especially I think Anya, it'd be good to hear what you have to say. I mean, there's we get quite a lot of companies that are really, it looks like they're really behind it. I mean, they're really pushing ESG and they're doing everything in their company to make it happen. Now, the investors you're dealing with, how many, if we can talk about percentages, which ones really care and which ones don't, or what percentages are kind of in the middle where we just want our margins? How is that coming from, I'd say, the U.S. or Western? Are they even asking about it? And if so, what level?
So 2 years ago, probably 10-15% of the investors would have the due diligence list, or they would ask.
Or even know what ESG was, yeah.
Yeah, so that would be typical Dutch investors, Scandinavian, the typical suspects. Today, every screening, every pitch, investor's pitch, every question starts with ESG. Mm-hmm. I think we are in the era that the greenwashing is over. So talking about, yes, we have the ESG strategy, yes, it is important for us, it's over. Everybody wants to see the details. Show me the case. Show me what you're doing on the ground. Show me what you are doing with a particular product, with a particular building, how you're applying your ESG. And it's not only about E now, it's not about the carbon, the energy, but very much about S. Mm-hmm. What are you providing to your employees? How are you making sure that you are providing, the health and safety, best labor, like all of that is starting to link together. Of course, the governance piece is being imposed by the European Union.
Sure.
With SFDR and Article 8 and Article 9 potentially. So pretty much all the funds now are discussing whether they can upgrade themselves to become an Article 8. Mm-hmm. But again, I think the governance piece and regulatory piece will strengthen and it will impact also the real estate investments, especially the developments, because there will be a price of every ton of CO2 emitted during the construction at some point. Mm-hmm. So this will be simply it will become a part of the construction or development budget. So we would need to address that. In US, they buy offsets. It's very popular. You go onto the market, you can buy to offset your carbon emission, and they are fine. So, yeah. So they are not yet. I think we're in Europe much more advanced. So within Invesco, this is now part of our global strategy, the ESG. We have targets, we have clear objectives, we have KPIs that we measure. So all our standing assets are measuring the utility consumption, water consumption on a quarterly basis. So we have this data, we start to analyze this data. Couple of our funds are in the GRESP, so in the system where they basically benchmark all the European funds or global funds.
Right, they're checking all that pretty close.
They are checking all of that. But really what investors want today, show me the case. Mm-hmm. How did you apply? Like if you're talking about, energy, show me. Like photovoltaics, yes, show me what you have invested, yes?
Right, and it's working, yeah.
And it's working and it's appealing really, and we're getting a lot of mandate just because we are able to prove that we are not only talking, but actually we're taking practical steps on the ground.
Well, I guess any investors that are thrown out at GRESP are done with investing. Yeah, they've got to figure out how to get their projects back in. Yeah, or their strategy would be the main thing. So, Małgorzata, on that note, are you dealing with a lot of? a lot of these issues and making sure they're in place for your clients on ESG issues?
Yes, of course, we can see that because, as Anya said, a few years ago, it was only a question. Yes, we are.
Of course, we are.
Doing,
Yeah.
yes, but now the theory comes into practice, and in CMS we have several people who are focusing on ESG, not only, as Anya said, on environmental, but also this S and social aspects. And we can see at the moment, mainly from the foreign companies, retailers, that they are really do care about the employees, about buildings in which they will have offices or stores. I think all those green buildings, not only in office sector but also in warehouse sector, will have more and more practical aspect and will be more and more needed on the market. Also in our company, we are a little office, but we really pay attention to ESG. We will, from the point of view of choosing the office building, to also paying that we will have a building which fulfills all those aspects. We also pay attention to our social aspects, to our employees, and I think this will be something that will be more and more important in business, in all sectors of business. We don't, to be honest, we don't have any other choice. We need to pay attention to environment, to people, etc.
Yeah, I mean, I guess it always starts with the clients, right? If the clients don't want it, why do it? Yeah. And so Matthew, just quick question. I mean, we get a lot of press releases from you guys on ESG, also your competitors as well, but them, and also, saving energy now, I know has been a big, here's how we could save 50%, also came from you guys. So how do these conversations start? I mean, you're meeting a new client or a client in a new project. I mean, are they starting at ESG, or when does that come into play?
I think we had the opportunity to learn from some of our clients over the years. A lot of the build-to-suit projects from big corporation where we had to build on their spec and their requirements. So we were able to absorb quite early some of the company that have self-apply this before it became
what was coming. Yeah.
Was coming. So we've obviously learned from that, and obviously answering to our clients' investors, which are also looking forward and say, well, I need to have building that cannot become obsolete. So, and now we are driving this as well, because it's also, we've learned from it. We understand our clients need it, but we also believe that it is important to do it, yes, for the environment, but also from a sustainability, but cost point of view, as you mentioned. But I think we've learned a lot. And that's been our approach and everything, but from the clients and these big corporations, some were talking about it, but then they start to do it. And I think, again, it's all coming back to the clients, both operator and investor, because at the end they need to respond to either their clients will say, I'm not going to buy from this company if they're not green, or investor that will have public regulation or costs related to on green building. And I think that's why, as a developer, we're pushing this agenda.
I mean, even if you have a client that says, I don't care, just build it, it still looks bad on you guys if you're just building it like that, right?
Correct.
So,
obviously, most important is always to service the tenant, what he wants. But at the end, we are creating a real estate asset which has investor at the back. So obviously, there's always a line on but up to now, that was the corporation putting the line higher, so we learn from it. But obviously, if tenants come and say, I don't care, it's okay, but you're getting a excellent BREEAM building anyway.
Right. Okay.
And that's that's it. So I think that's a plus for the industry.
Okay, well, I think we'll be, I know it's more retail, but of course, the retailers, there's a lot of ESG that, goes beyond what we can even to answer here. So, but yeah, I think in our next event, we'll talk a lot more about that, because it really is investment for logistics, for buildings, and on that side.
I think the supply. Sorry for that, but I think the supply chain as well. It's trying to. We were mentioning before, trying to get the product closer, because there is, of course, there's always a discussion between e-commerce and whether it's the product move more, whether it's brick and mortar. At the end, if it's still product produced in China, or the avocado are from Peru and they're flying in this Carrefour, whether it's e-commerce or not, that's where the products needs to come closer, or production closer. I mean, we're not talking about, you have green warehouse where you're going to start producing, vertically vegetable closer to town. And
right.
I mean, in a few years, I'm sure that's going to be the big trend. That's what we're going to be building and selling back to Invesco, because that will also make sense from a cost of proximity point of view. I mean, in Canada, they build warehouse for cannabis, right? I mean, a few years ago, and even here, we would say this is mad, but this is what is.
Well, every 3 or 6 months, there's always something on TV where some journalist found some little kid making some clothes or something, and they're blasting some brands, and probably it's, not really a real estate thing, but yeah, it's out there.
That's whole link.
Yeah. So, okay, so we're going to wrap up the panel. If we have any questions, we'll take them now. I think, Monika, we'll start with you. Just any last comments, any last angles, any comments, things we missed, pearls of wisdom for 2022?
I would like to say that we have used the COVID time to do the certain homework, and let's say, questionable whether you may say it was a quiet time. It was quiet in terms of investment, financing, but definitely not with respect to the, let's say, difficulties with opening developments and relations with tenants. But it was the time that we have used to analyze and adapt to the market. And driven by the interest of tenants, of the other market players, some investors, and pretty particular interest, and focused on either smaller retail parks or, let's say, larger types of retail projects. We believe in, and I see a future growth, not only here in Poland, still in this retail convenience, I would say. There are some places where some convenience shopping centers still can be realized, and under the roof many things are possible. And since we have both, shopping centers and retail parks, it's pretty difficult to have a good retail park and create a nice marketing for it. You have to compete. There are, many mouth-watering, let's say, investment opportunities. Some are done by institutional investors and some by local heroes. Still, you have to find yourself on this market. And I believe that, probably some more marketing and investment will be done in the retail park sector because it's rapidly growing. There is a relatively larger retail investors pool for smaller retail parks. However, they are not so much resistant to the competition, and therefore we believe in the sort of called power centers. So something like we have done in Andrychów, where there is, let's say, drive-through DIY, all possible components, and hopefully, I observed that some of the tenants on the market that were in the past owners, occupiers, and they turn into leases, which really helps us to really create those power centers, because having a larger plot, we can accommodate much more tenants. I would also wish that we have a larger tenant base, and just like Karolina is expanding, something that is really needed for this rapidly growing retail park sector. So the food and beverages is actually missing, and there's too much fashion wants to come into to retail parks, which is actually for the investors not sustainable. And you know, this food anchors, DIYs are welcomed, but less and less fashion, which is actually growing and moving to retail parks. So I'm very happy we have, and also here in the room, some potential new tenants in the other retail categories. I also believe that shopping centers will be sustainable, because I see really polarization of the client's needs. It's I don't see in the future a lot of room for middle market sector. I see either let's say relatively high expensive, maybe not totally in Poland luxury, but also these very non-expensive products are pretty well welcomed by our clients, and therefore, and taking into account all what the other, let's say, colleagues said here in the morning, I believe that also our shopping centers will be sustainable in the future, having good locations and proper asset management.
Okay, so invest in a big enough plot where you can put a big retail park and 20,000 apartments around it.
I would wish, because we also have here representatives of the banks, to see more, let's say, pretty brave moves to invest into developments, because this is something that everyone wants, talks about, but in fact it's pretty hard to realize when you get the drop of the LTC, you know, to 50 from the levels that were seen in the past. So I really hope, and I see the future for, let's say, portfolio investors to come into the forward funding, forward purchase, and also alternatives for investment of that kind of new developments in such as leaseback and finance and operational.
Okay, Karolina, any final comments, pearls of wisdom?
Yeah, so I totally agree with Monika about the trends and what will be the situation. And I need to say that I'm very happy with the situation. I'm happy that you will open a lot of retail parks, because I fit to this concept.
Fit to retail parks, yeah?
Yeah, okay. I fit to this concept very well. Because of our plans, I need to have many locations, and I want to be everywhere, like everywhere. Thank you.
Well, great. And I guess when we end this, they can also take a nice walk to your store on Nowy Świat, right? And I heard there's nice sunny warm weather outside, so perfect time to go for a walk right after this. Let us know what...
My final words.
Yeah.
I hope next year we will not be speaking about dark stores and changing of the city centers of Warsaw, city center of Warsaw and other cities. I hope we will have more high streets, and the dark stores will not grow in Poland. And I think that's it. I think that we will still have the good year for all sectors, for retailers, for developers, for investors as well, because all of those sectors adjust very quickly to this changing environment. And this is, I think, the most important thing, that we all need to adjust very quickly, because everything is changing very quickly. And I think in 2 years there will be so much artificial intelligence everywhere that the investor will know, and that maybe the developer will know upfront. The investor makes a decision what to buy, and Amazon will know, or probably already knows, what we will buy in a week. So ESG, artificial intelligence, and hopefully not dark stores for next year.
Well, Amazon keeps sending me ads of what I need to be buying if I'm not buying enough, so then I catch on from there. Anya?
It should be on retail only, so
Yeah,
I'll try to make it on retail. So I think we will see more investors willing to test and try retail again. This will start pretty much with the retail parks. Obviously, luxury in Europe is doing and will do very well. I think personally that shopping centers in Poland will struggle. I mean, that's my view. Obviously, we're not talking about top 10 performance, but generally, I think we have too many shopping centers because simply the customers have changed their behaviors. They are much more online. They are much more into convenience stores. They want to have everything within the walking distance, the concept of the 15-minute city where you can have all the services around you. But I think also our retailers have realized that, and they are already, adjusting the way their model. It is about experience. It is about attracting the customer with something different than just the simple purchase. So there will be a repurposing of the shopping centers. I believe some of them will be closed and converted to some other uses, for example, last mile logistics or potentially PRSs or any other functions. This will be the trend that we are already seeing elsewhere, and this will come to Poland as well.
Mm-hmm. Yeah, I mean, and you mentioned luxury stores and luxury goods, and I think Frederic is right. It looks like it looks like a discount country, but if you talk to actual people that buy luxury goods, and Polish people in Poland, none of them have bought it in Poland. They buy it at Heathrow, or they buy it at the airport, or they buy it in London, or they, somewhere else. So I have a feeling the luxury market is there, but if you own a luxury store, you're going bankrupt because they've seen it, they bought it, and they buy it somewhere else, or they're having a hard time. So I think it's not so much, it probably looks like, Poles only want half-price stuff, but I think it's just they're going somewhere else to buy it. I mean, all the few rich people I know, not very many of them, but none of them bought anything in Poland. They're like, we bought this when we were in London, or we bought this when we were in Italy. And so the retailers here, and probably for rightly so, because it's just more expensive here. And, that's most of it. It just costs more, because they're selling less of them, I would imagine. Matthew, some last comments on that?
Yes. I think it's all about supply chain. And if you, of course, there are going to be some loser on asset class, whether it's shopping centers, but some people mention High Street. I think probably many years ago, you would have looked at Warsaw and there was no High Street. There was nobody to take the ground floor, of units except the bank. Yeah, and now you have Żabka, you have also a new integration of Żabka dealing with now InPost and giving delivery, and I think that's where retailers are adjusting. And the same about the discounter or the proximity food retailers that are getting closer instead of being stuck in the shopping centers where nobody can enter. So it's not about retail is dying. It might be that you need to adjust some asset class, and industrial, we had to do the same. I mean, doing last mile building, it's not easy when you need a 50,000 square meters of land to build a 10,000 square meters box with parkings. The first look at it doesn't add up, and it's about adapting. So that's what we try to do in our business, and I think the same will happen in retail. I mean,
and they want it on a mealy platter, right?
Correct. The clients are there. I mean, it's still the same clients. We just need to serve the retailers that need to bring their product to their clients. They will need pickup points, they will need returns point, they will need trying points and showroom. It just, shopping center needs to reinvent themselves, and they might need to be fulfillment center in the night. I mean, why a shopping center should be closed all night when they can pack some box and be ready to send in the morning, for example. I mean, some are being demolished or reconverted in the U.S. We've seen it. Real estate developer or Amazon has, took a shopping center that was on the highway and reused an hypermarket, which makes sense. It used to be a storage anyway. I'm not saying that's what will happen to all shopping centers. They just need to adapt and use their best need, and we'll serve the retailer with their warehouse development.
Oh yeah, even a handful have been purchased in the last few months, and they're changing them to residential or something else.
It doesn't help the retailer that they would be converted into a residential. It would be better if they would be converted into return place, but again, the money will chase where the yields are. Correct.
Yeah, exactly. Okay, and Frederic, we'll just finalize the panel with you. Any final comments or pearls of wisdom or angles we missed?
I would say that in Multi we are very optimistic about the future because we see that tenants are optimistic. Even we are sometimes refusing some because we have no space enough in Forum, for example, in Forum Gdańsk or Magnolia. So they want to expand, and we see that the demand is there. Just they need to have quite a stability about the situation. But we love retail in Multi. We like that, but also it's just a part of the community. Now we are also focusing on modifying a little bit, not only retail, but also coming with services and residential, as we did in Forum Rotterdam, with a big tower of residential in the middle of the retail asset, and changing the second floor with services. So it's changing. We have to adapt the asset to what clients are expecting or the market is expecting.
And the services companies are probably happy to be on the second floor of a busy shopping center. Yeah. Okay, well, that's the end of our CEE Retail Forum. I'd like to thank you all for attending, and please give a round of applause to our panelists. Thank you for coming. Thank you all for coming and your time. Under these quite strange circumstances, I must say, last year we did everything online. I'm very happy to see a lot of you here. And tonight we're, of course, doing the gala. We got a lot of interesting things going on, a lot of categories. So if you need any extra tickets or anything, just talk to our staff out front. And we start at 6:30. Will be a lot of fun, a lot of things happening. So thank you again. We got plenty of food, networking, drinks, little business lunch, coffee, whatever you want. And enjoy the rest of the evening. Click here to subscribe to the Coffee with Craig show. And don't forget to share it with your friends.